Hello, today we're going to talk about the FHA loan requirements. It's going to be a comprehensive dive into everything that's required. I'm going to try to touch on just about all of the main topics that you're going to need to know. If you do have any questions, you can ask them down below in the comments section or just visit FHAlenders.com where we could answer your questions there, but also get you a quote and get you pre-approved if that's what you're looking for. So the first thing is, who are FHA loans for? A lot of people think they're just for first-time home buyers, and that's not the case. They're for anyone that wants to purchase a primary residence home, as long as that mortgage program, the FHA loan, fits for you. So FHA loans are great for people who have a low down payment, have a low credit score, or are trying to stretch their buying power and buy a little bit more house or get approved for a higher amount than what you could get qualified for under a conventional loan, because the FHA debt to income ratio allowances are higher. So they're also for individuals who may have had a recent bankruptcy and don't want to wait the number of years that is required for a conventional loan. The waiting period is shorter for an FHA loan. So there are quite a few instances or reasons why an FHA loan might fit for you. They're extremely common too. FHA loans account for about 25%, give or take, of all of the mortgages that are originated in the United States. So what are the basic requirements? So the basic requirements are that the home be your primary residence, that you meet the credit score requirements, which I'll get into, that you do not exceed the debt to income ratio of 56%, 56.9% is the maximum. I talked about the home being your primary residence. You do need a 2-year work history. Despite what some lenders may tell you, it does not have to be at the same job. They're looking for a steady 2 years of full-time work. Even if you do have a little bit of a gap in there, you can still get approved with an FHA loan if you're working with the right lender. You must be able to fully document your income. So you have to have 2 years. If you are a W-2 wage earner, you need at least 2 years of W-2s. Your last 30 days pay stubs, your last 2 months bank statements. If you are self-employed, you're going to need to be able to document your income using the income that you show on your tax return. So if you have a lot of write-offs and therefore show a very low net income or even a loss, then an FHA loan might be difficult for you, and therefore you might be looking for a bank statement loan instead. The home also must qualify, not just you. So the home must also pass an FHA inspection. The FHA inspections are rigorous in that they want to make sure that everything's in working order, it's safe, there are no hazards. They'll be looking at things like lead paint, asbestos, all of the electrical wiring needs to be in order. So all of those things would need to be taken care of before you close on the loan. And if that's not possible, or if the seller's unwilling, then you might be looking at an FHA 203K rehab loan, which will allow you to borrow the money needed to make those repairs or fixes or modifications or even upgrades if you're looking to change the home, enroll it into the loan, and then you have 6 months to get those repairs done afterwards under the watchful eye of an FHA 203K consultant. It's a different video. I'm going to link to the FHA 203K rehab loan here in the event that you're interested in that program too. So we talked about who they're for. So let's go back into the credit score. Let's go deeper into credit score requirements. So FHA credit score requirements. FHA guidelines state that you'll have a 3.5% down payment if your credit score is at least 580 or higher. If your credit score is between 500 and 579, the down payment requirement will be 10%. Now, keep in mind that not all lenders are willing to go that low on the credit scores, and that's where the challenge comes in. A lot of people go and do their due diligence and do some research online and find that FHA allows for very low credit scores, and then when they speak to lenders, they find out that no, the credit score minimum is 620 or 640 or whatever it is. Keep in mind that's just their minimum requirement. You can go lower, and it's just difficult to find a lender who will. If that's what you're looking for, again, just visit FHALenders.com and we'll help you to find somebody. So if you have no credit score at all, the lender can use non-traditional credit to verify this. They'll look at rental history, anything else, utility bill payments, things like that, to help verify whether or not you're credit worthy. So we talked about the down payment, debt to income ratio, up to 56.9% as I record this video. Again, not all lenders will go that high, and then there are some compensating factors. You might not be allowed to go that high. The lender might lower that if you've got some other challenges like credit score, for example. But it does allow you to qualify for a much higher mortgage than a conventional loan. Closing costs. So let's talk about that. Your closing costs are going to be anywhere from about 2.5% to 5% of the loan amount, depending on the size of the loan. That's how the percentages will vary. So you'll pay for things like credit report, an underwriting fee, a doc prep fee. I'm just reading here off the screen. Home inspections, appraisals, the survey possibly, an attorney fee if you're using an attorney. Kind of do recommend you use one. Title search, title insurance, recording fees, wire transfer fees, and then you're going to have, if you're trying to buy the rate down, you might be paying points with the lender. You may have an origination fee. Then you're going to have tax escrows and homeowners insurance escrows. You're going to have to prepay those. Flood cert fee and recording fees. These are some of those things are going to be standard and customary and will vary by lender. So the FHA loans come with a mortgage insurance premium. So you pay a 1.75% at closing, and then after that you have a monthly mortgage insurance payment that's included in your mortgage payment. It's FHA's version of PMI, and now that mortgage insurance is in place for the life of the loan, unless you put at least 10% down, and if you do, then you can remove the mortgage insurance premium after 11 years. If you want to learn more about FHA mortgage insurance premiums and mortgage insurance, I'll link to that video here also. So we talked about the documents, about the tax returns, W-2s, pay stubs. You're going to need also 2 months bank statements, Social Security card, driver's license, a credit report which the lender will pull for you. You're going to need the appraisal at some point, which you won't pay for until you get your approval, and then you move ahead with the appraisal. The property, we talked about it being a primary residence. It needs to be a 1 to 4 unit property. Cannot be 5, 6, 7, 8 units. It can be. You can look at it as an investment, but you must live there for at least a year. It cannot be a fix and flip. No overhead power lines are permitted, and it must be a property that has access to emergency vehicles. So it can't be, down a logging road somewhere in the middle of Montana where no one can get there. And again, free from hazards and toxins. The other thing that you need to know is there are loan limits for FHA loans. There is a maximum loan amount designated for each county in the United States. And we do have an FHA loan limit lookup tool that you could reference. I'll see how many times YouTube will allow me to link to another video here, but we'll put the FHA loan limits video and also a link in the description down below where you can look up the loan limits in your county. As I record this, the loan limit in most counties is around $420,000, and there are some high-cost counties where they go a lot higher than that, depending on where you live, because in some areas you cannot get a home for $420,000. So you cannot exceed the loan limits. Now the loan limits also increase as the property size increases, meaning a single-family home will have one limit, a two-family, three-family, four-family. The loan limits increase in your county for each of those step-ups in number of units. So back to the FHA appraisal or inspection. So the inspector is going to be looking for things like lead paint, plumbing issues, electrical issues. The appliances need to work properly. Your AC unit, if you have one, needs to work properly. You're better off not having an air conditioning unit versus having one that doesn't work because it won't pass inspection. You need to have proper drainage around the property. If it looks like downspouts are coming out right up against the foundation and the basement's wet, that's going to fail the inspection, and the seller's going to have to take care of that before you're able to purchase the home. The roof has to be in good condition. The foundation, you need to have railings on the stairs. The stairs need to be in good condition and not falling apart. There are all these types of things that are going to be picked up on an FHA inspection, and it's geared to protect you and also protect the lender and or the FHA who's backing the loan with their insurance, making sure that the home is not going to fall apart soon after you move into it. It's protecting you. So again, if you're buying a house that is in need of serious repair and the seller's not willing to make those repairs, you could ask your lender about the 203K rehab loan. So I think I took you through the majority of the high level basis points of what an FHA loan is and what the requirements are. If you have any questions at all, just please again list them down below in the comments section, and or visit FHAlenders.com. If you want to get pre-approved, we can help you there, and your pre-approvals usually last for a couple of months. While you're shopping for a home, you will have to likely update and refresh your pay stubs and bank statements if the process takes a little longer because you haven't found what you liked. But it's a good thing to speak to a lender before you start searching for a home, and your realtor is probably going to require it anyway. They rather you have a pre-approval in hand before they start driving you around the neighborhood looking at houses. So again, thank you for watching. We appreciate you stopping by. I hope you find a home that you love and that you get a great mortgage. We're here to help you with that. Thanks for watching.